All right, today we're going to dive into a story that every single investor really needs to hear. It's a bit of a cautionary tale from the, let's face it, very exciting world of climate tech. We're going to break down the spectacular rise and, well, the pretty brutal fall of a company called Rain Enhancement Technologies, or RAIN, to really understand the anatomy of a stock collapse.
Okay, so picture this. A company with a mission that sounds like it's ripped straight from a sci-fi movie. Solving global water scarcity. I mean, what an idea. It captured the hearts, and definitely the wallets, of tons of investors. But as we're about to see, that inspiring dream pretty quickly soured into a financial nightmare, turning a potential world saver into a wealth destroyer for anyone who bought into the hype.
So the real question is, how does this even happen, right? How can a company with such a powerful, vital mission just see its value completely evaporate almost overnight? Well, let's peel back the layers and find out.
Okay, so our investigation is going to start with the event itself, the crash. And let me be clear, this wasn't some slow, gentle slide downwards. We are talking about a sudden, violent drop that sent absolute shockwaves through its investors and caught pretty much everyone off guard.
So what did this collapse actually look like? Well, you see two key things happening at once. A massive price drop, and it's happening on incredibly high trading volume. When you see that combination, it signals what's known as a confidence shock. It's that exact moment where the collective belief in the company's story just shatters, and optimism flips to pure panicked selling, seemingly in the blink of an eye.
But to really get why it fell so hard, we have to rewind and look at why it climbed so high in the first place. What was it about Rain that was so attractive? Well, it all came down to a powerful, almost seductive story that was just about impossible to resist.
So what was Rain's whole deal? Well, they were operating in this really niche field called weather modification, basically using cloud seeding technology to try and make it rain. Their goal? To help governments and communities fight drought. I mean, come on, it's a compelling, super high-tech solution to one of humanity's biggest, most pressing problems.
And that right there, that was the perfect pitch. You had a huge, noble mission, you had futuristic tech, and it was all wrapped up in the red-hot climate tech sector. Plus, with very few public competitors, Rain wasn't just another company. It was the company to bet on for this kind of thing. It had every single ingredient for a massive, hype-fueled rally.
But here's the thing about a great story. It can only carry you so far. If the foundation underneath is shaky, those cracks are eventually going to show. So now, let's get into the nitty-gritty and examine the specific factors that led to the collapse.
Before we go any further, we need to get our heads around a super important concept. Cash burn. Think of it like this. It's the speed at which a company is just burning through its money before it's actually making any. For a young, research-heavy company like Rain, this number is everything. It's basically a ticking clock on their survival. So you've got these four pressures all creating this vicious cycle. The high cash burn and operating costs combined with little to no revenue all pointed to one terrifying outcome for investors: dilution. That's the big risk, that the company would need to sell more and more shares just to survive, making every single existing share a smaller piece of the pie and, less valuable. And this really gets to the heart of the problem. It was this classic battle, speculation versus fundamentals. Rain's value was built entirely on speculation, on the story, the hype, the what if. But the fundamentals, the actual revenue, profits, a stable balance sheet, they just weren't there. And a stock that's built only on a story has no safety net. When sentiment shifts, there's absolutely nothing to catch it on the way down.
And you know what's wild? Even after the crash, the debate just raged on. The bulls were still clinging to that long-term mission, saying the drop was just a huge overreaction. But the bears were pointing to the unproven business model and the immense risk. This deep division is the classic sign of a purely speculative stock, where hope and fear are the only real things driving the price.
All right, so we've talked about the numbers, but a stock's price isn't just about spreadsheets. It's also about people. It's about emotion and fear and greed. And the psychology of the crowd, it played a massive role in both Rain's dramatic rise and its spectacular fall.
This slide just lays out that emotional journey perfectly. It starts with FOMO, the fear of missing out, as the price just keeps climbing. That quickly morphs into overconfidence. This stock can only go up. But then, the first signs of trouble lead to doubt. Wait, why is the price dropping? And as the drop gets faster, doubt just spirals into outright panic. It's just, sell, get me out now.
And this is such a critical psychological lesson. So many investors drastically underestimate how quickly sentiment can turn on a dime.
Confidence is the bedrock of a speculative stock. Once it cracks, the shift from greed to fear isn't just fast, it's violent, and most people are simply not prepared for it. So, after all of that, what can we actually learn from this? The RIN saga is a really powerful case study, and if we sift through the wreckage, we can find some incredibly valuable takeaways that apply to any investor, really. Seriously, if you remember only one thing from this whole breakdown, let it be this: a great story is not enough. A world-changing idea doesn't automatically equal a good investment. So here's a quick toolkit to help protect yourself. 1. Check the fundamentals. Look past the exciting story to the actual numbers. 2. Manage your risk. Don't put all your eggs in one basket and have a plan for when to get out. 3. Know your own strategy. Are you in this for the long term or just for a quick trade? And finally, number 4, maintain emotional discipline. The best plan in the world is useless if you abandon it the moment panic sets.
And that brings us to our final thought. The next time you come across a company with a powerful, exciting narrative that just gets you fired up, ask yourself this simple but profound question. Are you buying a great business, or are you just buying a great story? The answer could make all the difference in the world.